Hello everyone, welcome to everyone. So looking at the condition of the market structure, let's go to the month market condition. Then we'll also look at the daily market condition, the 4 hours market condition, the 1 hour and the 30 minutes, just for us to have an idea of what you're anticipating the market to give to us. So let's go to the month. Let's delay this. So yesterday, gold created a new all-time high at 4888.04. Looking at the condition of the month market structure, we are in an uptrend. We have a bullish candle, a strong bullish candle, and a bullish candle, a bullish candle, and a bullish candle, and a bullish candle. So this strong bullish candle is this month's candle, while this rejection bullish candle is last month's candle. So it's very important just for us to know what you're anticipating the market to give to us. So since this is the recent month's candle, this line indicates the low of this candle, then this line indicates the high of this candle. This line indicates the low of last month's candle, like December candle. This line also indicates the low of the previous month's candle, because it's very important for us to have an idea if the candle wants to break the all-time high or if the candle wants to reject off and break the low of the recent month's candle. So let's go to the daily. Looking at the condition of the daily market structure, this candle that created a new all-time high closed with a bullish candle. The previous candle closed with a bullish candle. So this recent daily candle is left with 15 hours before this candle needs to close. But the candle has created a wick at the bottom. So we don't know if this candle wants to continue to fill this wick over here, by which this candle might give us a new all-time high. Let me show you guys. Let's move this. So we have a bullish candle and a bullish candle. So this candle has created a new all-time high as of Wednesday yesterday. So the next candle has created a lower wick. So that means the body of this candle can continue to go up to fill this wick, by which if the candle wants to break the high of this candle over here, so that means this candle will end up giving us a new all-time high. So let me say, for example, that this candle has created a wick at the bottom. So that means the body of this candle can continue to go up to fill this wick over here. But the moment the body of this candle over here, let's assume that this candle is a bullish candle. So the body of this bullish candle over here can continue to go up to fill this wick over here. Then the moment the body should break the high of this bullish candle, so the body will end up creating a new all-time high like this. End up creating a new all-time high like this. But as of now, we don't know if this candle wants to continue to come down to fill the low wick over here, or if the body of the candle wants to continue to go up to fill this wick. But looking at the condition of the daily market structure, we are in a consolidation zone. The reason why I say that we are in a consolidation zone is because of the fact that we have a resistance zone over here and then we have a support zone. So we are kind of looking at how the market condition is. Let's go to the month market condition. You see that we have a very strong bullish candle and a bullish candle, like a bullish candle, bullish candle, bullish candle, bullish candle, bullish candle, bullish candle. So we are in an uptrend. So the daily market structure, we have a resistance zone over here. We have a support zone over here. We have a support zone over here. This candle has broken above this resistance zone. So we have 1, bullish candle, one bullish candle, and one bullish candle. So if this recent daily candle should fill this week, and then for the body of the candle to continue to go up to create a new all-time high, then we can consider this daily market structure to be an uptrend. So as of now, we don't need to do anything since we are still anticipating the body of this candle to continue to go up to fill the wick of this bullish candle over here. So the best thing is just for us to wait, since this candle is left with 15 hours before this candle needs to close. So let's go to the 4 hours. Looking at the condition of the 4 hours, let's delete this. Let's delete this. So this is the resistance zone that we just drew right now. I understand that we don't need any of this. Let's delete them. This zone is a consolidation zone. So looking at the condition of the 4 hours, the 4 hours, we are in a consolidation zone because the candle has moved up. And let me use this one rather. The candle has moved up, then the candle decided to come down. So the only reason why this candle, the only reason why the formation of this 4 hours market structure will be in an uptrend is when this candle needs to break this all-time high over here. Then the moment a bullish candle like this, let me show you. The moment a bullish candle, let me change this color to green. So the moment a bullish candle should break this, like the high of this place over here, and then close with a bullish candle, that the next candle will continue to go up to close with a bullish candle, then we can consider the market structure in 4 hours time frame to be in an uptrend. But as of now, we are in a consolidation zone because of the fact that this recent 4 hours candle, which this 4 hours candle is left with 3 hours before this candle needs to close. So this recent candle needs to break this high over here, this resistance zone over here, and close with a bullish candle, that the next candle had to break the high of this bullish candle that close above this resistance zone over here, and then close the bull. That means we can consider this market condition to be in an uptrend. But as of now, the market condition is still consolidating because we don't know if this candle will decide to, it has broken the high. Let me show you guys. This recent 4 hours candle has broken the high of this bullish candle over here. Let me adjust this. It has broken the high of this bullish candle over here, and then it has created a lower wick. So that means the body of this candle can decide to reject off this zone to close with a bearish candle. So that means since we are considering this zone as a consolidation zone, so the only reason why this zone will continue to be an uptrend is when this candle decide to close the bullish candle, or this candle decided to close the very strong bullish candle and close above this our resistance zone over here. Then the next one, we have to break the high of this bullish candle and close the bullish candle, by which we will consider this zone to be an uptrend. So but right now, looking at the condition of the market condition in these 4 hours is just consolidating. This candle can as well decide to close with a bearish candle like this. That's the next one. We decide to continue to break the low of this bearish candle and close like this. So we don't know what the market condition wants to do. So it's very important for us to have an idea what the month market condition is saying, the daily market condition, the 4 hours, the 1 hour, and then the 30 minutes, just for us to know if it is the right time for us to take a position, or if we are approaching a recent resistance, or if we are approaching a recent support. So that means this zone, we don't need to do anything in this zone. Let's see if the market structure will consolidate, or if we we will see a bullish candle that will break this resistance zone and close with a bullish candle like this. It's very important for you to know what the market structure is doing, just for us to have an idea that the next candle might give us a bullish candle, or the next candle might give us a bearish candle. So we have a range between this resistance zone and this support zone for us to be able to identify this 4 hours market condition to be an uptrend or a consolidation zone. But as of now, the market structure is just consolidating. So let's wait until the break of this resistance zone for the candle to continue to go up. Then before we'll be able to identify this zone to be an uptrend. So let's go to the H1. Looking at the condition of the H1 is clear that we are in a consolidation zone, because we have a resistance zone over here and then we have a support zone over here. Just look at how the body of the candle, they are all printing side by side. So let's delete this. Let's delete this. Delete this. Let's delete this. So the H1, we are in a consolidation zone. We have a support zone, we have a resistance zone. So until the break of these are supports, or until the break of these are resistance, the candle will have to break this line over here, since this line is the all-time high on gold. So a bullish candle will have to break this all-time high to close above this candle, by which it will form a new all-time high. So it's very important for us to know what the different time frame they are saying. So from this resistance zone down to this support zone is being considered as a consolidation zone. So let's identify this zone as our support zone. Let me change the color to, let me use a different color. Let's use this. So we have a resistance zone over here as well. So that means we are anticipating the break of this resistance zone and the break of this support zone before we'll be able to anticipate if it is the right time for us to take a position. So as of now, the market structure is just consolidating, so we don't need to do anything. We have a support zone over here. So let's go to the 30 minutes. So looking at the condition of the 30 minutes, let's adjust this resistance zone properly here. Then this support zone, let's adjust it. You guys know I love to identify my resistance and my support using the 1 hour and the 30 minutes. So from this resistance zone down to this support zone, it's very important for us to measure the range so that to be able to have an idea what you're anticipating the market to give to us. So we are looking at 1,000 pips. That's huge. We need to zoom the chart a little bit so that we'll be able to identify a recent support and a recent resistance. Because since the range from the resistance to the support is 1,000 pips, so that means we need to anticipate a very strong volume to come to the market to close like this, and a very strong volume to come to the market to close like this. So we don't need to anticipate the market to give us this strong bullish candle and this strong bearish candle. We don't need to do that. So it's very important for you to kind of identify a recent support and a recent resistance, and then you need to measure the range to see if the range is like 200 pips, 300 pips, or 50 pips, 150 pips, or 250. So let's zoom the chart a little bit. Let's delete this box. We don't need it again. So looking at the condition of the market structure, this is our recent support zone. Then we have a resistance zone over here, but this candle closed with a very strong bullish candle, and then this resistance zone is no longer valid. The next candle has broken the high of this bullish candle over here, but looking at the fact that we are considering the range from this resistance zone down to this support zone, we are looking at 1,000 pips, and that's huge. So this will be our recent resistance. Then if there is volume, the volume should be able to break this resistance zone, then for the candle to continue to go up to this resistance zone over here. So we'll identify this zone as our recent resistance. Let me adjust this here. Let's see. Let me delete this. So we have a recent support over here. Let me just change the color. Change the color to this. Yes. Let me just get it. Then let me try a new one. So let me delete this. So let's measure from this resistance zone down to this support zone. Let's see the range. So we are looking at 540 pips range between the resistance and the support, and 540 pips is huge. So the best thing is just for us to wait. We can as well consider this zone to be our resistance zone and our support zone, since this is the recent support and this is the recent resistance. The only reason why we kind of anticipate to have a new resistance and a new support is only when this candle should decide to close with a bearish candle like this. Let me just change the color so that everybody will understand that this candle will decide to close with a bearish candle. The next one can give us a bearish candle like this. For the next one to give us a bullish candle and close like this. Then the moment we have a formation of candles like this, when we have a new formation of candle, that means this zone will be considered as our recent resistance, and then why this zone will be considered as our recent support. Then that means we'll be able to measure the range from the resistance zone down to this support zone. As you can see, we are looking at 322 pips. So it's better this way than having 1,000 pips or having a 500 plus pips. You kind of having a good range from your resistance to your support, it helps because it's very easy for you to see a bullish candle that will close like this than you kind of anticipating the candle to give you a very strong bullish candle like this. So this is the reason why it's very important for you to measure from your resistance to your support, because it's good for you to know what you're anticipating the market to give to you. It's better for you to have this expectation than for you to have a very strong bullish candle like this. It's easy for you to see this type of move that the next one can continue to give you a bullish candle like this. Then you will definitely see a bullish candle like this for it to continue to go up. So it's better for you to have 1, 2, 3 bullish candles that will give you this formation than you kind of anticipating the market to give you a very strong bullish candle like this. So it's always important for you to know what you want and how you want it before you can decide to take a position. So since this is our anticipation for the market to give us this type of condition So let's adjust this to the recent resistance over here, and then let's adjust this to the recent support. So that means we are expecting a bullish candle to break this resistance zone for the candle to continue to go up. We have a resistance zone over here, but if there is volume, the volume should be able to push the candle to break this resistance zone for it to continue to go up to this resistance zone over here. And then we are also anticipating a bearish candle to break this support zone. We also have a support zone over here and a support zone. So let's adjust this properly here. So that means if there is volume, the volume should be able to break this support zone and this support zone for the candle to continue to come down. But we need a candle, a bearish candle, that will need to continue to break this support zone for the candle to continue to come down to fill this wick over here, because it's very important for the candle to fill this wick. That means if the candle should fill this wick and there is volume in the market, then the candle can continue to come down to get to this support zone over here. So it's very important for us to know what we want and what we are anticipating the market to give to us before we can decide to take a position. So this recent 30 minutes candle didn't break the high of this bullish candle over here. Let me zoom the chart a little bit. So this 30 minutes candle didn't break the high of this bullish candle over here. So that means this 30 minutes candle wants to reject off this zone to close with a bearish candle. And you guys need to understand that, like, we are anticipating a bearish candle to close like this for the next one to give us a bearish candle by which we'll be able to identify a recent support and a recent resistance. And the moment you're able to identify a recent support and a recent resistance, then we'll be able to measure the range from the resistance zone to the support zone. Then we'll need to anticipate for the range to be like 200, 300 or 150, so that we can easily see a candle movement of this form or of this form that will break our support zone, and then for the candle to also break our resistance zone. It's better this way than you kind of anticipating the market to give you a very strong bullish candle like this. As you can see how the market structure is, just see how the candles are. You have a bearish candle, bullish candle. So it's very easy for us to see a candle like this, a candle like this, a candle like this. Now we kind of anticipating to see a very bullish candle like this, or for us to anticipate to see a very strong bearish candle like this. So it's very important for you to know what you want and how you want it before you can decide to take a position. So our anticipation should be for a bearish candle to kind of close like this, then for the next one to continue to come down like this, then for it to continue to come down to get to our support zone. So there's a high probability that we'll be able to see the formation of candles like this. Then we kind of anticipating the market to give us a very strong bearish candle like this. So that means we are anticipating this candle to close with a bearish candle, then for the next one to break the low of the bearish candle, then for it to continue to come down, by which we'll be able to identify a new support and a new resistance. So for now, this is our resistance zone and this is our support zone, and the range from this resistance zone to this support zone, we are looking at like 500 plus pips. So let's see what the market structure wants to do, since this 30 minutes candle is left with 5 minutes before this 30 minutes candle needs to close. So let's wait until this candle will close, and then let's see what the next 30 minutes candle wants to do. So since we are able to identify our recent support and our recent resistance, let me bring this consolidation zone over here, because this is a consolidation zone. From this resistance zone down to this support zone is a consolidation zone. So our sell anticipation is here. Our buy anticipation, let me see. Let me see our balance patient is here. Let's zoom the chart now. So these are our consolidation zone. These are our buy anticipation over here. So these are our sell anticipation. Let's just maintain this. Let's maintain all this. Let's just keep it. Since this is what we are anticipating the market to give to us. So our sell anticipation is here. In the next 4 minutes is London open. So we are anticipating volume to come to the market so that we'll be able to have a bullish candle that will close above this resistance zone and a bearish candle that will close below this support zone. But with the next candle, we have to break the high of the candle or have to break the low of the candle for the candle to continue to go up and for the candle to continue to come down. But I'm going to tell us if it's the right time for us to take a position, because it's very important for us to kind of look at what the market structure is saying. Then the moment you're able to identify a setup, then we don't need to hesitate. We just need to open our position and anticipate the candle to keep going up till it gets to our take profit. But we are looking at 500 plus pips over here. But there's a high probability that we'll also see a bullish candle that will close like this. That will close like this. A bullish candle that can close like this. Let me change this to green. So it's very easy for us to see a bullish candle that will close like this. Then since in the next 2 minutes or 3 minutes time is London open, that means there will be volume in the market for the candle to continue to go up to give us a strong bullish candle like this. Then we'll be able to secure our profits. So for now, we don't need to do anything, which I'm going to tell us if it is the right time for us to take a position, or for now we just need to chill. We don't need to do anything. So let's see what the market structure wants to do. Let's see. So just in case you guys have a question or you're just joining right now and you don't understand anything, you can send your message in the chat box and I'm going to get back to you. So in the next 1 minute, this 30 minutes candle will close. So let's wait and see if the candle will decide to close with a bullish candle, or if the candle will decide to close with a bearish candle or a dodgy candle. Then we will anticipate what the next candle wants to do, since in the next 1 minute is London open. Let's see what the candle wants to do. I'm just looking at my auto screen just to have an idea what the market structure is saying. So this 30 minutes candle has closed with a bullish candle, but it respected the high of this bullish candle over here. So let's see what the next candle wants to do. Let's see what the next candle wants to do. So there was volume over here. As you can see how the body of the candle, the body of the candle, they are printing small body and a small body, but over here we have a very strong bullish candle. So since this is the beginning of London Open, so that means you are anticipating for this candle to break the high of this bullish candle and this bullish candle. Then the moment the candle should break our resistance zone, which I'm going to tell us if it is the right time for us to take a position. But as of now, we don't need to do anything. Let's wait and see how this candle will print. If this candle will continue to break the high of this bullish candle and this bullish candle, or if the candle will continue to come down to break the low of this bullish candle, by which the candle can decide to close with a bearish candle. So for now, we don't need to do anything. Let's see. Let's see. This is London Open. Let's see what the markets want to do. So this recent 30 minutes candle has broken the high of this bullish candle, and it has broken the high of this bullish candle, just like how we are anticipating it for this candle. So but the moment this candle, let's measure from the low of this candle to our resistance zone, we are looking at 97 pips, but it's fine. So but the moment this candle should break our resistance zone, I'm going to tell us if it is the right time for us to take a position. But the moment we open a position, I will not advise you guys for you to put your stop loss at 97 pips. No, because if this candle should be able to break our resistance zone, so I don't see any reason why the candle should also come back to get to your stop loss or our stop loss, because we are anticipating it for it to continue to go up since there is volume in the market. Let me see from the low of this candle down to this over here, we are looking at 140 pips. 140 pips from the low of this candle to the high of this candle, 140 pips. So let's see. But this candle needs to break the high of this rejection bearish candle. So we are looking at 130 or 140 pips. So you can choose to set your stop loss according to your trading plan. If your trading plan says you need to open a position with 1 lot or 2 lot or 5 lots, and then your stop loss should be like 25 pips or 50 pips. So from your entering position down to your stop loss, always follow your trading plan. So if this candle should continue to go up to break the high of this rejection bearish candle over here, the moment you open a position, so make sure that you set your stop loss according to your trading plan. Don't go and set your stop loss at 140 pips. Don't do that, because if the candle should break the high of this bearish candle over here, I don't see any reason why the candle should also decide to come back to like to this week over here. No, because since there is volume in the market and since this is the beginning of London Open, so that means you are anticipating this candle for it to continue to go up to break this resistance zone over here. So the best thing is just for us to wait until you are able to identify a setup before we can decide to take a position. So for now, we don't need to do anything. So let's see what this candle wants to do, since this is the beginning of this 30 minutes candle and this is London Open. So let's see. The moment you are able to identify a bullish candle like this from this zone over here, but looking at how the market condition is, there is volume in the market. So the moment this candle should break the high of this bearish candle over here. So let me get my MT5 ready. I'm coming. Let me just get my MT5. Let's see what the market structure wants to do. Okay, so let's see. Since we are anticipating volume to come to the market, since this is the beginning of London Open, so there is volume in the market. The moment this candle should break the high of this bearish candle over here, let's see. But you guys need to know that from the high to the low of this same candle, you're looking at 140 pips. So what you guys need to do, let me show you guys. If this candle should continue to go up to break the high of this bearish candle over here and we decide to open a position, so let's say this is a resistance zone that we are anticipating volume to break this resistance zone, and then according to your trading plan, your trading plan says you need to take like 200 pips, and then you need to risk like 50 pips. You need to risk like 50 pips. 50 pips. So the moment you open a position here, I don't see any reason why the candle should also continue to come down to get to your stop loss. I don't see any reason why, because there is volume in the market. So that means the volume should be able to push this candle up for it to continue to go up to get to your TP. So it's very important for us to know what you're anticipating the market to give to us before we'll be able to take a position. Or if your risk to reward is 1:2, that your stop loss is 100, and then you are risking 100 to get 200, or you are risking 100 to get 250 or 300. So whichever one. But the moment the candle should break the high of this bearish candle over here and we decide to take a position, make sure that according to your trading plan says you are risking 100 pips to get 250 pips. So always know what you want from the market and how you want it. And if this candle should continue to go up to break the high of this bearish candle over here, I don't see any reason why this candle will continue to come down to get to your stop loss. So it's very important for you to know what you want and how you want it before you can decide to take a position. So let's see what this candle wants to do. Let's go to the 15 minutes candle just for us to have an idea what the 15 minutes candle is doing. 15 minutes candle is left with 4 minutes. Let's go to the 5 minutes. So the 5 minutes has created a bullish candle, bullish candle. The body of this candle didn't break the high of this bullish candle. So this 5 minutes candle will still continue to go up. So the 15 minutes candle is left with 4 minutes. So let's see what this candle wants to do. Let's see what the candle wants to do. This 30 minutes candle is left with 18 minutes before this 30 minutes candle needs to close. So we don't need to do anything since we already know what you're anticipating the market to give to us. So all we need to do is just for us to be patient. We don't need to do anything until we are able to identify a structure before we are able to take a position. So for now, we don't need to do anything. So this is the beginning of London section, and then we are anticipating volume to come to the market. So let's see what the markets want to do. Let's see. Let's see what the markets want to do. Let's see what the markets want to do. Since we are still anticipating for the candle to continue to go up to get to the high of this, to break the high of this bearish candle over here. So for now, we don't need to do anything. Let's see what the candle wants to do. So let's see, the candle is about to continue to go up to break the high of this candle over here. Since you're anticipating volume to come to the market, the moment the candle should break the high of this bearish candle over here, then you can decide to take a position. So for now, we don't need to do anything yet. Let's wait. Since from the high of this bearish candle to the low, we are looking at 140 pips. So like I said, the moment you take a position, you need to put your stop loss at the exact place that according to your trading plan. If your trading plan says you're using 1 lot, or you're using like 5 lots or 6 lots or 10 lots, and then your stop loss should be like 25 pips, 50 pips, or 100 pips, just put your stop loss there, because I don't see any reason why, if the candle should break the high of this bearish candle over here, for the candle to continue to go up. So I don't see any reason why the candle will decide to come back down to this zone over here. It's like the candle, let me say, from this place, from the low of this candle, the candle decides to move and break the high of this bearish candle. So I don't see any reason why the body of this candle will also decide to come down to this zone over here. I don't see any reason why. But the moment the candle should do something like this, that means this buy position will no longer be valid, because the candle can choose to reject of this zone to create with a weak candle like this and close with a bullish candle. Let me show you guys. The candle can choose to close with a wick like this. It will get to this high and close with a bearish candle like this. So let's consider this like a bearish candle. So that means this candle formation will be a rejection bearish candle like this. So but the body of this candle hasn't broken the high of this bearish candle over here. So let's wait for this candle for it to continue to break the high of this bearish candle, then we can decide to take a position. So for now, we don't need to do anything, and this candle is left with 11 minutes before this 30 minutes candle needs to close. So let's wait and see. Well, 11 minutes, hopefully. So there is volume in the market, so the volume just needs to continue to push to break the high, then for it to continue to push to break this resistance zone over here. So let's wait and see what this candle wants to do. Let's see what this candle wants to do. Let's go to the 15 minutes. The 15 minutes has broken the high of this bullish candle over here. Let's go to the 5 minutes. Like I told you guys, that the candle will still continue to go up. So let's wait and see. Let's see the 1 hour. The 1 hour is left with 40 minutes. So that means the 1 hour wants to continue to go up to fill this wick over here, then for it to continue to go up to break this resistance zone over here. So let's see what the candle wants to do. The candle is left with 9 minutes. This 30 minutes candle is left with 9 minutes for this candle to close. So we are anticipating volume to come to the market for it to give us a strong bullish candle like this. For the candle to give us a strong bullish candle like this, since this is London open. So for the next one to break the high of this bullish candle and close with a bullish candle like this, we should be able to secure our profit. This is what we are anticipating the market to give to us, just like how I drew it over here, that we are anticipating the market to give us this type of market condition. Then we kind of anticipating a very strong bearish candle like this, but there's a high probability that we will see a bullish candle of this form, a bullish candle of this form, and a bullish candle of this form, and a bullish candle of this form. You can as well see something like this, but it's only when you have a very strong volume, or maybe there is a news something happened, then before you be able to see a very strong candle that will print this way. So for just a normal day, you will see a bullish candle like this, you 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 see a bearish candle like this, you see a bearish candle like this. So it's always good for you to know what you're expecting the market to give to you. So this 30 minutes candle is left with 8 minutes. So you also need to look at the time. You also need to look at the time if you are trading. Let me say, for example, that we have, like according to our plan, so we are anticipating this candle to break the high of this bearish candle over here. Then we can decide to take a position. So if this time is 30 minutes and then this candle should get to like 5 minutes or 4 minutes, and this candle should continue to go up to break the high of this bearish candle, you need to ask yourself, the candle didn't move all like since 30 minutes, then why is the candle moving in the next, like, let me say 4 minutes before the candle needs to close, or 2 minutes before the candle needs to close? So these are the things you need to consider. That's why I told us that I'm going to tell us if it's the right time for us to take a position. So for now, we don't need to do anything. Let's wait until this candle needs to break the high of this bearish candle over here, or this candle can choose to close below this resistance zone over here, because it's very important for you to know what you're anticipating the market to give to you. It's not just when the market is going up or when the market is coming down you decide to take a position. So you need to have a plan, which at the moment we have our plan. So we are anticipating this candle for it to continue to go up to break this zone over here. Then the moment the candle should get to this place, we'll open a position anticipating the candle to continue to go up to give us a bullish candle like this and a bullish candle like this. So for now, we don't need to do anything until the close of this candle, and this 30 minutes candle is left with 6 minutes before this candle needs to close. So always know how you are anticipating the market to give you a setup before you can decide to take a position. Let's see what this candle wants to do. Candle is left with 5 minutes right now for this 30 minutes candle to close. But looking at the condition of this 30 minutes candle, that means this 30 minutes candle can choose to close below this resistance zone over here. And at the moment, this 30 minutes candle should close below this resistance zone. So you need to ask yourself, what are you anticipating the next candle to give to you? Always have a plan. You kind of having a plan is not just your trading plan. As you're trading, you're kind of looking at the price action of the market. You're kind of looking at what the market is saying. Then same time, you'll be able to relate it with your trading plan. You shouldn't just be trading that, oh, I have a trading plan, so let me just come to the market. Anyhow, the whole thing is, I will just force it. You don't need to do that. So you need to have a plan, know what you want and how you want it, and then look at how the market is printing. The moment you are able to identify a very good trade, then all you need to do is just for you to execute that trade. So for now, we don't need to do anything. So this 30 minutes candle is left with 4 minutes before this candle needs to close. So that means this candle didn't break the high of this bearish candle over here, this zone over here. Since our entry position is here, this candle can as well decide to close with a rejection bullish candle or a rejection bearish candle. Let's see in the next 4 minutes time, then we'll be able to tell how this candle will close. So for now, we don't need to do anything. This is why it's very important for you to know what you're expecting the market to give to you. Let's say this candle has broken our resistance zone, but we have a plan, which our plan is for the candle to continue to go up to break, to get to this zone over here for us to take a position. But this candle didn't get to this zone, so that means this candle respected this zone over here, and then the candle can choose to close with a rejection bullish candle. But if this candle should get to this position over here, this is our entry position, I'm not going to open a position, because the time of this 30 minutes is left with 3 minutes before this candle needs to close. So always know what you want and how you want it before you can decide to take a position. So for now, we don't need to do anything. Let's just wait for this candle to close. If this candle should get to this position, we don't need to do anything. So let's wait for this candle to close. Then if this candle should close with a strong bullish candle or above this our resistance zone over here, then we can anticipate the next candle to create a lower wick, then for the body of the candle to break the high of this bullish candle. Then the moment the candle should get to our entering position, then we can decide to take a position, anticipating the candle to continue to go up to give us a bullish candle like this, or to give us for the next one to break the high of this bullish candle, and for it to give us a bullish candle like this, by which we'll be able to secure our profits. So for now, we don't need to do anything since this candle is left with 2 minutes for this candle to close. So let's wait and see. Like I said, if the candle should get to our entering position, don't do anything, just wait. The candle is left with 2 minutes for this candle to close, so let's wait. We need to know what we want and how we want it before we can decide to take a position. Let's look at the 15 minutes. Let me see what the candle wants to do. So let's wait for this candle to close. And if this candle should close, then we need to wait. Don't take a position yet. I'm going to tell us when to take a position. Don't take a position yet. Just you guys need to wait. Let's wait. Even though this candle should close with a bullish candle above this our resistance zone, the next one should get to our entry position. Wait. I will tell you, I will tell us when to take a position. You guys need to wait. Don't be in a rush to take a position. Let's wait. Let's see what this candle wants to do, what the next candle wants to do. We need to understand the movement of the candle before we can take a position, even though we have a trading plan. So for now, we don't need to do anything. Let's see what this candle is rejecting all that zone. Let's see. I'll be able to secure a profit. So if this candle should close above this resistance zone over here, and the body of the candle should just shoot up to break the high of this bullish candle and break this zone over here, we're not going to take a position. Like I said, let's be patient. We don't need to do anything. I'm going to tell us that, okay, let's take a position. So you guys don't need to do anything. Let's wait and see how this next candle will move. Let me delete this. So this 30 minutes candle has closed with a bullish candle above this our resistance zone over here. If this candle should get to this our entering position, we don't need to do anything. Let's wait first. Let's wait. But I'm anticipating this candle for it to give us a lower wick, then for it to continue to go up, to break the wick, and for it to continue to go up. So let's see how this candle will print. So I'm anticipating the candle to continue to come down for us to create a wick. Can still continue to come down to create a wick. Let it continue to come down. So the candle has created a wick. So let's measure from the wick to our entering position. From the wick to our entering position, we are looking at 43 pips. Now 43 pips. So we are anticipating volume to come to the market for it to push the candle. Let's see. We are looking at let's see what this candle wants to do. We don't need to do anything. Let me measure this. 120 pips market. So let's see. Let's see what this 30 minutes candle want to do. So we are anticipating this candle for you to continue to go up, to break, to get to our entry position. Then from our entry position down to the low of this candle, we are looking at 50 pips. So 50 pips is good for us to set our stop loss. But if your trading plan says like 25 pips or 15 pips, so follow your trading plan, because I don't see any reason why the candle will have to get to this position for it to continue to come down. That means the buy anticipation will no longer be valid. But there is volume in the market since this is London section, so we are anticipating it for it to continue to move up to get to our TP. So we are still anticipating this candle for it to continue to go up. Let's see how this candle will print. But this candle should be able to respect the low of this bullish candle over here. So let's see. Let's see what this candle wants to do. So we are still waiting for the candle to break its high for it to continue to go up. But the candle want to continue to come down to create a bearish candle. Let's see what this candle wants to do. This 30 minutes candle is left with 22 minutes. So let's see what this candle wants to do. If this candle will continue to come down to create with a bearish candle, so that means our buy anticipation will no longer be valid. So but for now, we don't need to do anything. Let's see what the market structure want to do. It has created a wick. Candle has created a wick. 6 minutes. With how the market condition is printing, candle went up to form a bullish candle, came down to create a new wick, came up again to form a bullish candle. Right now the candle wants to continue to come back down. So let's see what this candle wants to do. Let's see what the candle wants to do. Because since this is London section, so for you to continue to move and break the high of this candle, it should be very easy. Then for you to continue to move up and close with a bullish candle like this. Then for the next one to break the high of this bullish candle for you to continue to move up. So this 30 minutes candle is left with 20 minutes for this candle to close. Let me see what this candle wants to do. Because with how the price action of this recent 30 minutes candle, this candle is forming a bullish candle and a bearish candle. That means this candle will continue to come down to close with a bearish candle. Because since there is volume in the market, I don't expect this candle to be printing this way like the candle is doing. So this candle will continue to come down to close with a bearish candle. But let's see. Sometimes the market can choose to give you a different candle formation. But let's look at the 15 minutes. The 15 minutes is left with 4 minutes before the 15 minutes candle will close. Let's look at the 5 minutes. The 5 minutes, we have a bearish candle and a bearish candle. So this recent 5 minutes candle hasn't broken the high of this doji candle and hasn't broken the low. Let's see what this 5 minutes candle wants to do. Our 30 minutes candle, just like how I'm anticipating it, but the candle will create a bullish candle, will create a bearish candle. So that means this candle wants to continue to come down to create a bearish candle. Let's look at the 1 hour. The 1 hour want to, let's see. The 1 hour has created a wick over here, but it hasn't filled this rejection bullish candle yet, this wick over here. So let's look at the 4 hours. We'll have a wick over here for this 4 hours candle to continue to go up to fill this wick over here. So let's see what the markets want to do. Let's see what the markets want to do. But anyways, guys, in the next 2 minutes time, I'm going to head off. So we already know what you're anticipating the market to give to us. In the next 2 minutes time, since we are anticipating this kind of way to continue to go up to break this zone over here, but the candle will give us a bullish candle and a bearish candle, bullish candle and a bearish candle. So it's very important for us to know what we want. But this candle will end up closing with a bearish candle with how the candle formation is. But I will still look at the market condition. The moment I should identify a good structure, then I can decide to take a position. But for now, we don't need to do anything. Let's see what this candle wants to do. Let's see what this candle wants to do. You see how it kind of create a bullish candle, create a bearish candle. So, but this candle will decide to close with a bearish candle because we are anticipating volume to come to the market for the volume to push the candle to close with a bullish candle. But right now, the candle has broken the low of this candle. You know, like the wick, it created a wick before, but it has broken the wick. So that means this candle wants to continue to come down to close with a bearish candle. So it's very important for you to know what you're anticipating the market to give to you before you can decide to take a position. So, but you guys always know what you want and how you want it. So I'm going to head off right now, which I will see you guys on Monday. Tomorrow is Friday. You know, the live stream is Monday, Tuesday, and Thursday. So I'm going to see you guys on Monday. So, but this trade, this candle can decide to continue to come down to close with a bearish candle. Just because of how the 15 minutes candle is printing, the 5 minutes candle is printing. It has broken the low. So, but I'm not using the 5 minutes or the 15 minutes candle to judge the market condition. No, these are weak time frame, but it's good to just look at what the different time frame they are saying, just for you to have an idea what you're expecting the market to give to you. So let's see. Anyways, guys, so see you guys on Monday. So for now, we don't need to do anything. Let's wait until this candle needs to close. Then before we anticipate the next one to break the high, or this candle can continue to come down to close with a bearish candle. So I'm going to see you guys on Monday. So bye for now, everyone.